Now, most of you already know that last week the SA cost of living or the CPI figures came out worse than what analysts expected. I mean, as seen on the screen, you notice that analysts or SA analysts were expecting, of course, the cost of living or the CPI figure to come at 6.9%, which obviously we saw the figures coming out at 7%. Now, this was something that obviously did not sit well with some of the retail investors, including myself, because I thought we would going to continue seeing, of course, the cost of living or inflation decreasing, because in the past 4 months we've been seeing a deflation or inflation or the cost of living in South Africa decreasing, which is something that obviously it's not only good to consumers but to also businesses, right? Because we are sitting with a situation where obviously some businesses, since their products and services are so high, we get to see, of course, the demand in the products of services which they offer to consumers, which helps them or which makes them generate revenue. So not, of course, doing that much or that well, which then results in companies not reporting good earnings, which of course we already know that if companies or most companies don't report good earnings, we say share price of the companies plummeting or dropping. So those companies that we invest in the stock market, after we see them not doing or not reporting good earnings or the earnings or the kind of earnings that so many analysts were expecting, we see those stocks in terms of the share price dropping. So yes, it is not good, the fact that inflation for the first time after 4 months we see it going or up or rising, which is obviously, you know what's coming this week. This week you'll know that, of course, the SA Reserve Bank is obviously going to announce interest rate decision, and I must say so many analysts as seen on the screen are expecting an increase in interest rates of 0.25% or 25 basis points, which that again is not going to only again hurt consumers, but it is also going to hurt companies, because as I said in the previous videos, companies, of course, especially with growth companies, they go in the banks, they go in financial institutions to borrow money to grow their businesses, which now obviously they won't be doing that as much as they were probably 2 years ago, because interest rates are so high. Same goes to consumers. Consumers are now a bit hesitant to go to banks to borrow money, because that they know that their repayment amount are so high, which is why they are a bit hesitant. So this is something that is happening right now, and seeing that analysts are already expecting interest rates in South Africa to increase by another 25 basis point or 0.25% will definitely give consumers more panic, and companies, which obviously we know that that is not good for our economy. But before we forget the actual theory, know that this video is just an entertainment video and not a professional financial advice. Now I really appreciate if you can just hit the likes button if you are enjoying the content that I'm giving you about what we saw this past week and what's coming this week. So if you are enjoying this kind of content, or if stock market or investing it is your kind of niche, then I would really appreciate if you can just hit the like button, as it helps with YouTube's algorithm. And after hitting that like button, if you have not subscribed, I'll also appreciate if you can just subscribe, and when you subscribe you hit that notification bell, so that at least you get notified by YouTube every time I drop a new content, because on this channel we are all about the stock market. We talk anything that, of course, affects or has an impact in the stock market or investing as a whole, rather. Because same, for instance, or for example, the fact that this week we could see the rise in interest rates, it simply means that obviously, of course, this is going to hurt or have a huge impact, of course, in our asset classes, depending on the kind of asset classes you are investing. Whether you are in property, you know that if you have a property that maybe you are renting out, you are probably going to see, and you are still owing the bank, by the way, you are definitely going to see, of course, your loan repayment going up if you did not do a fixed loan interest or a fixed interest when you take that loan. So it affects almost everyone that's investing, which is why I'm saying that. So yes, we know that obviously these of course have a huge impact not only into the stock market but in of course most asset classes that you can or that are available for me and you to invest in. Same goes with the CPI figure, or same goes with the cost of living figures. Most of you already know that if CPI determines, or it is a figure that shows how much is the money that we have in banks is losing value when we look at inflation, because most of you already know that real interest, it is equals to the nominal interest, which is the interest that probably you are sitting with at your current asset class, minus inflation, which in South Africa the last week we saw that inflation came out at 7%. So if you are not making anything over 7% in terms of your asset classes, or if you are not seeing of course your interest in your various asset classes sitting on top or over 7%, then ladies and gents, you are not making anything, because currently in South Africa money is losing value at around 7%, which is something that I think, yeah, to simplify it, it's just like that. Money in South Africa is losing value by 7%. So if you are not making 7%, obviously at the moment you are losing money, right? Which is why it's important that obviously you try to find asset classes that can generate you some good rewards, some good of course interest in the future. Which is why obviously, I mean, yes, in South Africa the cost of living, or the CPI figure, it's still very high, and yes, we know that of course the SA Reserve Bank is targeting an inflation of between 3 and 6%. So until we get to that bracket, then we are going to definitely see this Federal Reserve increasing interest rates, which is what exactly I personally believe we are going to see this coming week. We are going to see the Federal Reserve increasing interest rates. In the stock market, what is happening is, of course, we are seeing most stocks locally, of course, not doing that well in terms of the share prices. There are a couple of stocks, though, that are still doing well, regardless of the current economic constraints, regardless of what we are seeing other stocks doing, especially in the mining sector, where we are seeing a lot of stocks sort of like getting hard hit because their earnings did not come as good as, of course, investors thought, which is why we are seeing a huge drop into mining stocks and also some other sectors. But one of the sectors that is doing quite well is the traveling and leisure industry, where we are seeing companies like Sun International, by the way, which is the company I own, doing really well. I mean, on Friday, Sun International, ladies and gents, hit a 52-week high, or another 52-week high, which is something that is incredible, because this is the company that in most companies that were reporting earnings, it falls under those few companies that did really well in terms of their earnings, which is something that is incredible. And I think you and me might not be surprised why, even share price wise, it is performing the way it is. So as I've said, me personally on this stock, I'm up over 19%, or I was up 19% on Friday when the market closed, which is something that is incredible, and something that obviously it makes me to be excited, because it is not all stocks that are not doing well in my portfolio, but there are a few stocks, or these kind of stocks like Sun International, that are making my overall maybe ZA portfolio to not be in that bad shape at all, which is something that I really appreciate. Now, over the US, yeah, but there are quite a number of challenges, quite a number of problems. I mean, there is a banking crisis happening in the US, which is resulting in most stocks, ladies and gents, to drop in terms of the share prices, especially, of course, banking stocks. I mean, BOFA, or the Bank of America, we saw it hitting 52-week low, I think, a couple of days last week, which that does not mean that the Bank of America is not a good stock to buy, but it just means that, of course, the whole saga that is happening in the banking system of America, it is making, of course, bank stocks like SoFi to not do well in terms of the share price. So I'm saying SoFi because SoFi is the stock that I'm investing in, though of course we have been seeing it dropping lately, but I'm up 3% because, ladies and gents, this is a stock that obviously I went and bought it again after I had sold my entire holdings, after I saw huge gains in beginning of this year, and repurchased that company when it was trading at $5.55. So these sharp drops that we're witnessing in some of the stocks in America or in the US, it is an opportunity again for you to go in and scoop more shares. I mean, as seen on the screen, notice that my portfolio in America right now, over 31% or over 30% in my US portfolio is cash. I'm holding cash because I am eyeing the opportunities that obviously of some of the companies that are of course dropping due to the current economic conditions in America, which obviously as they drop, I add them to my portfolio. I buy more. That's if I already own that company. So when the market are dropping in the US, or when stocks that I own or stocks that I've been wanting to own drop in America, the plan is for me to go in and scoop in more shares. I think this week, probably by the end of this week, probably, I don't know, my cash might be just over 20% because I'm planning, or there are quite a number of stocks which I'm planning to buy this week in the US. So yes, these sharp falls, sharp drops we are seeing in the markets offers good opportunities for those that are investing for the longer term, which is why, yeah, if you are investing in the stock, or if you are in the stock market for a long term, you don't have to panic sell some of those shares that you own, which probably you are on a red, especially if the fundamentals of those companies or those stocks you are holdings continue to grow, or they continue to do well. Because as I've said, now we are seeing also good stocks dropping in terms of the share price due to the effect of the current economic condition, except for those that are not doing well in terms of earnings or fail to beat analyst expectations. Most stocks, especially in the US, continue doing well in terms of their earnings, which is why I continue saying it's an opportunity for you to scoop more shares if those companies are dropping in terms of the share price. So yes, banking stocks, or the banking sector in America, is being heavily impacted by, of course, the Silicon Valley saga, which obviously it is making consumers now to be hesitant to go in and deposit, of course, more money into banks as they fear that they could not get the money or their money as they want. I mean, we just read that the US bank deposit fell by over $98 billion for the week which ended in the 15th of March, which is something that must just show you that obviously if deposits are falling like this, then consumers maybe and other companies are starting to, or they're a bit hesitant to deposit money or to do their deposit into the banks, which obviously, like I said, it's a short-term thing. And I believe that especially the sharp drops that we are witnessing into banking stocks offers the good opportunities for those or for some of you out there to scoop in more shares into this industry, because one way or the other, I personally believe that this is a short-term thing, and the stocks or the banking sector as a whole in America will recover, which is something that is incredible. So this banking sector crisis, I personally believe that is not in America alone. I think even locally we might be sort of like experiencing maybe this kind of things, as of course banks might not be generating enough money as they were due to the fact of interest rate hikes. As I've said to you, or as I said in the beginning of this video, consumers are now hesitant to go loan money in banks because they know that their repayment is small. Companies are scared or skeptical to go in and borrow money to go their businesses because they know that repayment will be more. So a lot of issues rise when interest rates, of course, are being risen by central banks, which is why I won't be surprised, or I personally think that it might be the same issue in most countries, exactly what we are seeing in America. The fact that interest rates are being risen by central banks trying to curb inflation, it is something that obviously in the short term will definitely hurt banks, because they won't generate as much money as they were generating previously. So locally also, I think one is to obviously go and check some of the banking stocks that of course are being impacted or that are being hurt by, of course, increase in interest rate hikes, because chances are, like I said, also locally here we might be seeing, of course, stocks or banking stocks being impacted by this, because like I said, consumers become hesitant, companies become hesitant to go borrow money from institutions or financial institutions, as of course interest rates right now are high, and if you have to go and borrow money, of course your repayment on that loan which you are taking will be high. So right now might not be the time where, of course, we'll see banking stocks doing that well, because of part of them includes, of of course, making money from loans they give out to consumers, loans they give out to businesses. Otherwise, with all that, guys, yes, this week we'll be seeing, of course, interest rate decision from the South Africa Reserve Bank, which already you know that analysts are expecting a 0.25 increase in interest rates, which that, ladies and gents, like I said, will not only hurt me and you as consumers, but it will also hurt companies, big businesses, as that will also mean that the loans that the companies who invest in have, or they will have to repay more money or more interest in the loans that or which they have. So I guess we just have to wait and see. But these sharp drops that we are experiencing in some of the stocks, or most of the stocks, offers opportunities to those that want to load the boat or buy stocks at a discounted price to go in and scoop in more shares, because one way or the other, the Federal Reserve central banks won't keep increasing interest rates forever. There will be a point in time where inflation will come between 3 and 6% in South Africa and at 2% in America. And when that happens, we already know that, of course, that is when, of course, the Federal Reserve will consider decreasing, of course, interest rates. Otherwise, I make tons and tons of stock market investing videos, and if you think that this video was amazing, please don't forget to hit the like button, comment, and subscribe. And once you subscribe, don't forget to hit or click that notification bell so that at least you get notified by YouTube every time I drop a new content. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.